The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Studios in St. Petersburg, Florida. Quite a start to the market. We got the Dow currently negative 90 points, or about 1/3%, trading 25,244. S&P is currently negative by 6 points, trading at 2807. And as I speak, we'll call the Nasdaq flat, but it was inching into positive territory. Quite an acceleration for the markets as we kick off this trading day. And as we kick it off every day, let's go over to our man Kevin Hinks from TD Ameritrade. Think or Swim. If you haven't checked out their program, new program, Fast Market, every day right after this program at 11 a.m. Eastern Time. Talking markets, talking options, talking earnings. Kevin Hinks, good morning.
Good morning, Tommy. How we doing? Happy Thursday.
Happy Thursday, man. You think you're going to have enough to talk about this afternoon, this morning on the show?
Well, I'll tell you what. Elon Musk delivered the goods yesterday in more ways than one, Tommy. Not only did he put up the growth numbers and make some promises going forward, but he also was very contrite on the conference call, and I think investors really liked the fact that he was a little bit, he showed a lot of maturity in his conference call, apologizing to some of the analysts. And so, Tesla, the news is pretty good. And, think about this, Tommy, and we talked about this on the air the other day. Anything close, and this investing community gives Elon Musk a passing grade if he gets anywhere close to the lofty expectations.
I'm glad you went right into Tesla, because I was going to go right there as well, because we wrapped up yesterday asking you what was the expected move, right? And it was like 8 or 9%, right? $24, $27, something.
$24, right?
$24, and of course it's up 30, so it even beats that. But I agree, man. The apology, especially because he was just so unhinged in the last 2 to 3 months that I think that was the fear, right? That if they had something bad to report, maybe he was going to get frustrated again, which I think gladly, whether he calmed himself down, he has some advisors that said it's time to do a little cleanup on that aspect of your leadership. And bottom line, he did, and they're not going to spend as much on capital expenditure next year, right? I think it was like $2.5 billion versus the $3+ billion they spent in 2017. So quite a number, man. 10%, quite a number if you're a Tesla shareholder for sure. And now we'll see
and Tommy, he said the P word. Profitable.
Right, I know.
He thinks they're going to be profitable going forward, and obviously investors love that.
Yeah, because that threat of just burning through all their money, the cash that they have on hand, and having to go to the market to raise more money, that's a scary deal when they're not even producing cars. But I agree. Last night they're producing cars, and they're going to start producing them at a profit, which 10% overnight.
His cash burn was a little low, and the cash on hand was a little higher than everyone thought.
And they think it's just going to go up, which is remarkable, right? I mean, quite a change from the days of just raising billions to burn through them and build factories. And that Model 3, we'll see if they start producing them. And as we talked about yesterday, we'll see the quality of those cars when they really start putting them out. I'm interested to see what the user reviews are as they start coming out, and they really start hitting mass market. So that was yesterday. What's going on today? We got a plethora as well today. What are you guys talking about on the program?
Well, obviously today we're going to talk about what came out of yesterday's Fed meeting and how you can, if you can't trade it and try to make money off of it, Tommy, we don't care about it, frankly. There's a lot of news stories out there that are maybe big news stories or headlines, but if we can't trade it, we don't want to cover it, right?
I agree, man, totally.
We're in this business to trade and make money, and that's our value that we're giving to our listeners. So today we're going to look at what we can talk about ahead of the payroll numbers tomorrow.
Nice.
Right? Think about this. With all the comments that Jay Powell made coming out of yesterday's decision to leave rates unchanged, which we expected, but he did make some headlines. But bonds are up.
Yeah.
Bonds were up this morning on that. But why? It's a head scratcher, but there's a knee-jerk reaction to these Fed meetings where they buy bonds, right? So what we're going to do is we're going to show how to trade that.
Nice.
Based on that, and look at bonds. So we're going to trade bonds. We're going to trade some of the other names. We're going to talk about our Tesla position that we put on yesterday. So we're going to go through the trades that we did. We're going to put on a couple new trades. We're going to look at crude oil again. That seasonal factor, no matter what these inventories are, seems to be kicking in here. And crude oil is going to be interesting. Then we're going to look at some of the names coming out with earnings tomorrow. AIG, pretty big company coming out with earnings tomorrow. We'll try to look at a couple other ones as well. But once we get to the mid-show, we're going to start looking at, what to expect from tomorrow's non-farm payroll and unemployment numbers. So
nice.
A lot to talk about today. Too much time, man.
That crude oil, man, even in the last couple hours, right? We were below $67. Now we're sitting above 68. And quite a number yesterday in terms of the EIA. We'll get natural gas today at 10:30, coming up right after the segment. But yeah, I mean, just the volatility in oil in general, trying to figure out whether it's, from $70 down to $66.92 this morning, and now we're back above 68 in a heartbeat, man. That is a volatile
Pretty
market.
Incredible.
Yeah.
Well, what's been going on in crude oil, I mean, with yesterday's inventory numbers, and if you look on the Thinkorswim platform, if you look at the 1-day, 1-minute chart from yesterday, the candle at 9:30 when the inventory number came out really shows you the inherent risk that you have to be careful around these number releases, right, and how you trade in your resting orders. That's what we kind of talked about yesterday. We'll talk about a little bit more of it today. But you know what we talk about, Tommy? On a daily basis, we try to talk about real topics to make traders better.
It's great, man. Listen, and if you haven't checked it out, right after our show, it's great. We get to lead into it, 11 a.m. Eastern Time, 10 a.m. Central Time, where Kevin is live from Chicago. They're talking options. They're talking about, and I love how you guys put together with theoretical positions, Kevin, just because examples, that's how I learn best. That's how a lot of people learn best. You just map out what's your bias, what you want to achieve from the position, and then how you kind of structure that position to achieve what you're hoping for, which is kind of half the battle when you're trying to set up trades in the best manner that you can.
We want our listeners and our viewers to have all the tools they need to make the right decisions on the trade that they're about to do to get the best optimal outcome.
And what a week to talk about it, man. And how about Apple, right? So Apple, they just had the share buyback. So what's interesting is before the share buybacks, they needed 203.45 to be the first trillion-dollar company. And they hit over that, but they bought back some shares. So now they need, I think it's 207 and maybe a nickel or something to hit that $1 trillion. And Apple up 1% today, man. You just can't hold that stock down for sure.
Well, I mean, let's face it. Apple was able to grow without needing the iPhone to do it. If you're a long-term, at the size of their company and what they do, if they can still claim that they're growing, pretty impressive.
It is, man. And like we talked about it yesterday, to wrap it up, that service is part of their business. I think it grew at 30+%. And you're talking about growing, like you say, on a number that has so many zeros, it's kind of hard to comprehend, right? Folks, right here, 45 minutes. It's earnings season. They'll be talking about positions. They'll be going over Tesla. They'll be going over those Fed, the bonds. Kevin, thanks so much, man. We look forward to the program and have a great weekend as well.
Good talking to you, Tommy. Always a pleasure.
You as well, man. Thanks, Kevin. Stay tuned, folks. We'll be right back. We're going to go over some natural gas EIA inventory numbers as they come out at 10:30. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Tommy O'Brien. It is Thursday, and I am fortunate today to be joined by our man Basil Chapman in the saddle joining me. Basil, good morning.
Hi, Tommy. How are you?
I'm doing well. How about yourself?
Very good, thank you.
Good. So, quite a earnings season so far, Basil. We had Tesla last night. I was just talking to Kevin Hinks. What are you checking out in the morning this morning? What's on your radar this morning? What are you looking at?
Well, there are a couple of things I'm looking at. When we go to the Dow, in the 120-minute chart, what I said to subscribers, because we've been short from last Friday, we went short because it made, in the Chapman wave, we're always looking for the fourth highest peak, call it peak D, and that's where we, almost every time we've been there in the Dow, we've started short positions, and so we did that again. But what's really interesting is in the 120-minute chart, there's a technique that I've developed over the years called the Chapman wave 5. The genesis was essentially this Elliott wave, but now it has nothing to do with Elliott wave other than there's a 5. So what I was looking for is that there should be a sharp pullback today below 25,278. That was the low of yesterday.
Basil, if you could just refresh your camera in the den, if you wouldn't mind. It's up there. I think something just happened. No worries. Just a quick refresh, and I'm sure that'll get it up there.
Yeah, we go off, on, checking, plunk. There we go.
Fantastic. Thank you. Yes.
Okay. So what we're looking at, there was a Chapman wave 5 at the rally that went to the 25,587 level back at 11:30 on the 26th of July.
Yes.
And then it came down in these different waves, and this was a leg F to the downside in the Chapman wave, plus a Chapman wave 5 in the 120-minute chart. So we've done that, and you can see went to 25,120. And now it's rallied very sharply off that low, but it's still down. Dow's still down about 100 points. So this is going to be very important. We've got this gap down. Will it fill the gap? What will it do? And if you look at the 120-minute chart, there was a beautiful, what I call a left side, right side price time match, where we were trying to see if there would be a test of the low that was made at 25,113 back at 11:30 on the 25th. And we got down, as I say, to 25,120, missed it by 7 points. So this rally is going to be very important, but it's really not the rally. What I am looking at is the fact that we've got a an overhang in the news. Now we can talk about tariffs. Before it was speculation. Now we're looking at tariffs as something that is becoming more a reality. So I think that provides us at least a headline excuse for a really choppy period in this August period in the summer. So that's really what I'm looking at.
I was just going to add to that, the tariff, as you're talking about the Dow in particular, of course, one of the stories looming last night was just the potential of the additional tariffs on $200 billion of Chinese goods. And you saw Asian markets getting hit to the negative side on some of those fears last night. And the Dow, a company like Boeing's down more than 1% right now, down $4. That Dow, for sure, you could see. I think that's the, tech stocks are getting hit hard as well. But Boeing can always move the Dow, and being down 1.2% as we speak, it's just it's interesting to see how those trade talks and the trade fears of what that can do to the market hit each index differently, in terms of the weighting.
Not only
and
that, Tommy,
sorry,
if you look at the different stocks within the index, even if you look at the NASDAQ, you've got some stocks in the NASDAQ that moved 8%, 12% on earnings reports up. But you've got many that moved, some of them moved almost 20% to the downside.
Sure.
So the reaction to the earnings, and we just saw Apple come out and...
I was going to say, right? Facebook was down 20%. Apple was up 5%. Tesla's up 10%. Definitely. Big moves for sure.
And look what's interesting about this is that Apple is up now again and rallying very sharply.
Yes.
And you've got Tesla up 28 points. And I heard a guy yesterday, I don't have a long time ago, I took a TV out of my office. But I was looking at the TV yesterday in the afternoon after the Tesla earnings, and some guy said, yeah, we've been short. Yeah, it's down some, but I'm going straight back to the office to reshort, to add to my short position. And I thought to myself, wow.
Hey, if you were ready to short it at 300, right, and you still had conviction in what you believe, then yeah, I guess shorting it at 330. But it all matters. Part of the Tesla enigma, I think, is that Elon Musk is great at PR, and I think we can all kind of believe that, except for some of his anomalies in the last couple months that he kind of went unhinged. But he cleaned that up yesterday. He said they're going to be profitable. He said they're going to produce a lot of cars, and I guess we'll just see if that comes to fruition, because that's the expectation.
That's the reality.
They've said it. Now they got to live up to it. Basil, what I want to jump to, so natural gas, we get inventories at 10:30 a.m. Eastern time. I'm just going to take a look over here on the Nadex platform. Let me find my monitor where we're at. Find the right window I'm looking at. Do I have it up here? I'm
a little behind. Maybe I got 2.769 up 11.01, and maybe I'm a little behind.
No, you are correct. You said 277, I believe. Is that what you just said?
Yeah.
You know what happened? I got too many good charts going on. That's what's going on. There it is.
So
there it is. I got it.
Interesting because it's rallying now ahead of the report.
Yeah.
It's gone from 6 o'clock this morning where it was at 2.744. I've got it in the 10-minute chart at a peak D in the Chapman wave. It's pulling back a little bit, and this is the 10-minute chart. I've got the same thing in the 5-minute chart. It's trying to tackle the top. And I would look at this in the larger context. If I'm looking at NG, and I know that they're probably different contracts, but I'm just looking at the continuous contract.
Okay.
It is trying to come off the bottom, the bottom that was just under 2.7 that was retested a couple of times in July.
Yes.
It hasn't really succeeded. And what my weekly chart is saying, you know what, regardless of whether it pops up or pops down, it's kind of stuck in a range. And this range is fairly wide on the weekly chart, but as you get closer in, it makes it quite clear that if natural gas starts to trade for a day or two above 2.84, that would be very good action, and that would target the 200-period moving average of 2.866. It would have to close under 2.69 for it to really become bearish. So it could really be in a trading range. Anything can happen after the announcement, as we know. But I'm just looking at it in a larger context, and that monthly chart is really not very good. It needs to be holding probably in the threes for a good week or two to say, hey, natural gas is on its way much higher. It's kind of stuck right now.
Nice. Yeah, and it's always interesting when you see some action ahead of the number coming up, not even in just a nefarious way, but just in terms of being volatile just ahead of that number coming out.
Yes.
And to take a look at some of the contracts, Tom and I go over setting up a volatility trade potentially, and what happens
what
when
would you do?
So if you, what happens is we've gotten so much movement here, Basil, that some of those trades we like to look at, they're going to have a lot of intrinsic value on either side because, for instance, the noon expirations, you're going to be forced to use 275 kind of as that pivot point, which is where they get set, kind of a couple hours ago when those contracts originally opened. So you could still make that trade, but if you're trading the bullish one, you're going to have about 2 pennies of intrinsic value you're paying for. And on the flip side, the 275, it would be just complete, kind of an out-of-the-money option. But nonetheless, we'll get those numbers at 10:30. We'll be on break for 3 minutes. We'll come right back with those natural gas numbers, and we're also going to come back. Yeah, we got our man Jack Gleason at 10:40 as well. Come on back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tommy O'Brien with Basil Chapman. We'll get into those natural gas numbers, but quite a spike. Basil, my chart, I'm not sure I'd ever seen this. My chart that I had open was actually not even able to see where natural gas jumped to originally, so the chart just kind of like resized itself to include the price range, because you saw natural gas go from about 276 up to 279 in the span of a split seconds on those natural gas numbers. So we ticked up to 279, traded 278. I was seeing that a build was expected of about 43 billion cubic feet, and I'm trying to dig into that actual number as we speak, and we'll get into it. Maybe in the den they're going to get me. Of course, Tom is on the road this morning with his Bloomberg, but quite a number nonetheless. We were just at 274 and change, as you said, Basil, early this morning, and we're gunning for 280 in no time in that natural gas market.
That's going to be very important in terms of how it holds into probably Monday, because at that level, it needs to go above 2.831. This is on the continuous contract.
Okay.
And if it can get anywhere into the 284 area, there's a really good chance that that 200 period moving average will become a magnet at the 2.86s. So if it, we've seen this often where the initial move up is not necessarily the way it stays or remains in that direction.
Definitely,
so
and that's why
happens.
that's why I like looking at some of those Nadex trades, because it is, man, it takes you the span of 30 seconds to 60 seconds in the first move. Natural gas getting some volatility, but it seems like oil recently is like really volatile in this same type of way, where you get the inventory number and oil could trade up $1 before trading down $2.
Has oil been influenced at all by the natural gas number?
No, I was saying, sorry, just
thing,
yesterday when oil gets their numbers, the way it behaves, as in it takes a good hour or two before maybe a trend really finds itself after those inventory numbers sometime. I mean, oil has surprised withdrawals when a build is expected, and it'll end up going in the reverse direction than you would anticipate on that type of a miss.
Right.
Natural gas 279, pretty remarkable.
Whew.
Right? Pretty remarkable.
That's a quick move. So Nadex is obviously perfect for that. What would you have put in a sell at a particular point, so that regardless of the speed, it'll hit that, and that'll trigger your gain? Or
definitely, if you are aware of where you might want to exit this position on one side or the other, you would definitely want that order in, just because, like we just saw, you could see natural gas spike up 3 pennies, but it spiked up 3 pennies, but it pulled back a penny and a half, in the span of that kind of 5 to 10 second oscillation. So if you know where you'd like to be, and we were talking about that the trades didn't line up too well for a volatility trade, because what's nice on the volatility side of this is that you pay very little intrinsic premium on either side, and intrinsic value on either side, and you're just paying a little bit of premium for volatility. But what would have been nice is that it traded in the direction, that you would have wanted, because 275, you would have had a bullish bias. All your intrinsic value would have been to the upside, so it's nice if you just wanted to make a directional trade with defined risk. That would be possible as well. So, and let's just jump back to oil as you say that, because oil, quite the oscillation this morning, and see if that's getting any action. I don't anticipate it. No, it's just really the action that oil had on its own. I mean, these are 5-minute bars I have up here. At 10 a.m., we traded from 67.60 all the way up to 68.10. You're talking about 50 cents, and that's not even, we were just at 67. Now we're trading at 68.13. That crude oil market will not back off for sure.
Well, what's interesting in the chart formation that I've got, there's a pattern that I call the lowercase h. You can see it came straight down from the high that was made in the third at 74.35. I mean, there were little troughs on the way, but basically it came straight down to the 66 level, bounced, and now it's sort of arched over. So it's going to be really important, because if crude oil on a daily basis, I'm looking at the continuous contract trading right now, I've got 68.20, so I'm a little behind you. You've got a 68.13. But if it closes on any day below 66.11, let's call it 66. If it closes under 66 for 2 days in a row, all of a sudden you've got a pattern here that says lower lows and lower highs, and that says that there's a good chance that it's going to slide a little bit further. So that's the way I would look at this. The only way that this arch formation will change if it starts to close nicely above 68.50, probably 68.70. That'll say, oh, nice, it's trying to make the M formation. It means that that base is now a base of support.
And what's interesting, just to throw in there, is that dive from $74, that was on an EIA inventory day that actually had a huge surprise for a draw. And you saw oil spike up $1 right after the inventory numbers. It peaked,
which is the natural thing to expect,
right? And it peaked
then,
right above $74, Basil. I think it was 74.03, 74 something. And then oil, I mean, you can't forget it when it moves like this. It traded down $4 in 4 hours, from $74 to $70. That was quite a day, and you can see that red bar on your daily that you're looking at. So quite a start to that acceleration for sure.
Yeah, so but it hasn't broken down. It's still within a trading range. If you look at the weekly chart, it's just kind of stuck between the 72s and the 65s. So watching crude oil, because you would expect with the crude oil pulling back like this, that the XAL, which is the airline, the ARCA airline index, will be doing well.
Yes.
No, down $1.21 at 103. Made that, always looking at those peak Ds. Look at the D that it made right there in the daily chart on the 27th of July. At 108.89, trading right now 5 points lower. This is contrary to what you were expecting. It's exactly what you were talking about with the announcement of the crude oil inventory, and all of a sudden you're looking at the opposite effect. Instead of going up, it goes down. So yeah, this is the opposite of what you'd expect.
Those airlines.
It's not a good sign for the airlines because, and you have to look at this and say, is this a slowdown that's occurring in the economy? So sub kind of an under the radar slowdown?
No, because I mean it's just remarkable if you look at even the much longer trend like you're talking about. We're looking at that monthly chart you have up there on that.
And we pulled back for 5 months.
Yeah, and even but look at the run that it had though, right? From 2016 through 17, when you saw oil really rising from $27 at one point to $70 being the new norm, at least $60 being the new norm, and you had those airline stocks going from $80 to 120 for that index. It's quite a run.
That's
even,
right.
Yeah.
And it's also a period where I'd be looking at something like a Marriott, a hotel, which already led us all the way into the January high of the S&P. It too made its all-time high at 149, and it's trading right now at 127. So this is, I'm looking at this and I'm saying there are signs that there are rotational recessions in different sectors. And the only way I can really look at it is to look at the chart and say, well, if Marriott, which really was part of the economy, this is Marriott resorts and hotels, and you can look at Hilton, you can look at all of them, were rallying so nicely, and for the entire year of 2008 thus far, they've been making slowly lower highs and lower lows. Is something going on? Look at this arch formation in the daily chart that's just formed. Look at the weekly chart. The technicals are very weak.
Yeah.
So I'm looking at this and I'm saying, this makes it for economists. It's a very difficult market to analyze because there are sectors that are not acting as well as they should, and there are sectors that are surprisingly very, very good.
Yeah, I mean, that's quite a monthly chart on that Marriott. Talk about breaking that uptrend, definitely, over the last 5-6 months. Okay, folks, come on back. We're going to coming back, I believe, with our man Jack Gleason from Major League Trading, talking markets, talking Fibonacci levels. We'll be right back.
Has the current market
Jack?
volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We got the Dow negative 110 points currently. S&P's negative by 3, and NASDAQ in positive territory, up 24 points. Let's go to our man Jack Gleason from Major League Trading, as we do every Thursday at 10:40 in the morning. Jack, good morning. Welcome back to TFNN.
Good morning, guys. How's it going? Sorry, I was super busy trading this morning, so I didn't get a chance to send over too much. I'm whipping some things up right now. I just
No
sent
worries.
you a chart.
That's why we love to have you on, man, because you're right in the thick of things, trading, looking at those markets. So what have you had going on this morning? Why don't we start there? That's perfect. What have you been trading?
I was looking at the NASDAQ here. Obviously, we came into some, we had some lows taken out in the overnight session. It was perfect in the S&P, I believe the Dow too, but the NASDAQ was holding strong this morning. Obviously, you have the back of Apple on it and gunning for, I think it just hit it like 20 or less minutes ago, first $1 trillion publicly traded company. Fantastic.
You know what?
Right now,
so I hate to burst your bubble, man, but all those share buybacks that Apple is doing, they bumped up the price to $207.05 to hit that $1 trillion mark. So put the balloons back in the ceiling, man, and we're waiting for that to hit the 207 number. Isn't that funny, Jack? I read that article last night in the Den. We're talking about it this morning, and they're giving that money back to their shareholders in terms of buybacks, and that reduced the amount of shares, and so they had to up the price to $207.05, I believe.
Oh, darn. Yeah, I thought for some reason, I'm looking at the older calculators.
No, I did the same thing. It just happened, really, on their earnings call. That's what from announcing the share buybacks. But nonetheless, man, what a company, right? I was talking to Kevin Higgs from TD Ameritrade earlier. You can't help but just the services that they're growing 30+% in terms of not even hitting the amount of units on their iPhones they want to sell, and just a powerhouse, man, in that NASDAQ.
Yeah, I mean, they got me as a customer. I got
too,
the AirPods.
man.
I helped them beat on that number. Got the iPhone X on an iMac.
Dude, nice. I got the 8 Plus. I got the AirPods in my ears, right? I'm looking at a watch. I know it's not a bad company to be a part of. So, Jack, I got your chart here on the S&P, and I see you got some fib levels on there. What are we looking for the S&P?
Yep, got some fib levels. So once again, this is one of those high-to-high extension sequences. We had a first test of this level on Monday, and then this morning we were opening below it, which I love to see, to be honest. On a second test, we came back into like the low area of Tuesday the 17th. There was a nice rally. I want to say that was Netflix's earnings, but I'm not positive. But we retested those levels. Really got a rocket ship out of here. This is going to target up towards 28.73, so that's where you want to be looking on the higher time frame. On the other side of that, we have held the halfway back short from the high. So that's just another level to be aware of, and that's from the high of the 25th to low. That gives us a 28.23 resistance level. So we're going to need to be able to see the S&P get through that to move up towards that target. If you guys remember last week, the level I gave you in the NASDAQ, and then what we had Amazon earnings right after that. Well, Amazon earnings came out. That level I gave you guys, it was like a 73.65 from last week's show.
Okay.
We traded Amazon's earnings. We traded 73.63 and then ripped straight up 100 and some points. But the next day we ended up breaking that level. But it was cool to have that level and then see the following reaction in the NASDAQ. But,
the NASDAQ really just has been, I mean, talk about volatility, man. Just like you were saying, I can understand this morning. You know, I mean, would we go from 72.20 around the open all the way up to almost 73.20 in the span of about an hour, hour and a half?
Yeah, I was looking at a 30-day hour chart in the S&P too, and I was like, you know, when's the last time we had an opening candle that was as strong as today? And I couldn't find one over the last 30 days. I mean, there was a couple with bigger ranges, but not that closed with that big of a price spread. I think that there was on the reversal candle, the high in the 25th, it was 18.5 point range, but that was just a huge move off the open, and we'll see if we can continue.
Pretty remarkable. So I have oil as well. Talk about something else with some volatility recently, even as recent as this morning. Basil and I were chatting about it. Man, so talk to me about all the levels you got here for the oil chart.
Yeah, so that 67 level I've been waiting for like 4 or 5 days. So I was happy to see that trade in the overnight session.
I remember that. That was on the chart. That was on the chart last week as well, right?
Yeah, I think it might have been on the chart last week.
Yeah. Okay.
So patience plays there. I was just like, wait. I'm like, come on.
No, definitely.
Going to Papa. Anyway, that was really, you know, I always pay attention to that. And you can go back and just look at the chart from the 19th of July. You see that huge move. That was a Thursday. I'm not sure if there was an oil report that Thursday or what created that move.
Yeah.
But that retest of those zones where you have those reversals are always solid opportunities to get long. So that's what we had trade here today. I'm thinking with this move here, I'd like to see us actually get all the way above the most recent swing high we had on Monday and trade like I have a level right at that red box zone. Call it 70. 75 area.
Sure, we're looking at it. Yep, right up, kind of above where we're at on Monday. Yes.
Yeah, so that's where I'd really expect. Like, if we get a hard continuation, there's going to be a little bit of resistance at this 68.70, which is the full halfway back short from the high of the week to low. So that is definitely a playable level, especially on a first test. We had natural gas inventory report today, which a lot of times will move oil. I love to see oil set up with nat gas inventories on the Thursday, because a lot of times, like yesterday, the inventory report came out in oil and we did nothing. I mean, it was just like, you know, it was the weakest reaction I've seen in a while. Today, you know, whether it's nat gas inventories that are affected or not, the fact that we traded that support level and then had those nat gas inventories. I don't know. Did you see what nat gas did? I haven't actually.
You know, we didn't pull up the number, but I did see natural gas spiking higher. So we traded from about let me get the chart. It was 275 prior to the number. It traded to 277 right before the number, Jack, and then it shot up to about 279 on the initial number. And to see where we're trading at right now, I don't know where it came in at, though. We didn't quite get there, but let's just see where natural gas, I'm curious where it's trading. Yeah, 279.
So, I mean, that's a move right there.
Oh, yeah. I mean, that was a quick move. It actually went from 296 to 276 to 279 on the split-second news that did come in. So maybe there's a little bit less in terms of inventory than they might have thought coming into that market.
Yeah, I wish I would have been watching that one here today, but what a great...
it's tough, right? When the NASDAQ's shooting through the moon at the same time as possibly natural
I know, right?
gas.
I got all these screens. I can't look at them all.
It's amazing that we're almost coming to accept, 1% moves. I mean, and you still have the VIX. Not bad, right? VIX at like 14 with the type of volatility we've been getting. Very low volatility premium in this market. So, Jack, tell people real quick, Major League Trading, I know they can go over there, get a free newsletter from you guys, and what do they get when they sign up for that?
Yeah, so we send out, I do free videos, everything from basic strategy, like, teaching people candlesticks that are completely new to the market. And then I'll do videos a few times a week. Well, kind of do the same thing I'm coming on with you guys, talking about levels that I'm potentially looking at as support or resistance, higher time frame targets you want to be aware of that could either stall the market or hold it firm. So that's basically what that is. Also have a YouTube channel, ton of great content on there, just
Nice.
like you guys. And so you can check that out as well. But yeah, feel free to go over to our website, majorleaguetrading.com, drop your name and email in, and I'll send you some good stuff.
Nice. Folks, check that out. And of course, you can check out right under breaking news at TFNN. You'll see Nadex Education, Nadex Market News. Jack's over there doing some great writing, some great education for Nadex as well. Jack, always a pleasure, man. Good luck. Thanks for fitting in some time during that busy morning of trading, and have yourself a great weekend, man. We look forward to talking to you.
Guys. Thanks
Awesome.
for having me.
Thanks,
Take
Jack.
care.
Take care, man. Folks, we'll be right back. We'll check in on the markets as we wrap up this hour. Come on back. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
We have the Dow negative 155, S&P's currently negative by 5, and NASDAQ positive by 19. And to take a look at that EIA number, so to my producers in there, I'm getting some feedback, whatever you guys are doing, plugging and playing. EIA report showing a smaller than expected weekly rise to get that actual number of a decrease. Natural gas inventories rising by 35 billion cubic feet. Expectation was 45 billion cubic feet. So Basil, that makes sense, right? Less than they thought. And you got natural gas continuing to trade higher, now above 280, Basil. It's going to be gunning for that. What was it, 283? Maybe. All right, they're figuring that out. I'm going to let them figure that out. I apologize for the technical difficulties, folks. But nonetheless, natural gas trading higher, 280. Quite a number for sure. Folks, stay tuned. We got Kevin Hinks, Tom White, the team at Thinkorswim, TD Ameritrade coming up with Fast Market. They're going to be talking Tesla. They're going to be talking earnings today. They're going to be talking about, as Kevin said earlier in their session, for bonds, for rates. I want to thank my man Basil Chapman for joining me today. We're live from St. Petersburg, folks. We're still working through a few technical difficulties in our brand new studio over here, but we'll get it fixed up. Thanks for hanging with us. Should be an exciting day in the markets as we come into Friday. And to wrap things up, check out that NASDAQ. Pulling back a bit just in the last 15 minutes or so. 73.11 being the high, currently trading 72.92. And crude oil as well. Trading higher, was down at 67 this morning. Crude oil trading 68.31, basically at session highs, along with natural gas as well. Energy prices going up in the summer, pretty remarkable, as those markets just will not stop. Crude oil cannot be stopped. Every pullback met with a rise, hovering around that $70. Basil, thank you so much. Thanks for joining me. Folks, thanks for joining. Stay tuned. Fast Market coming up right now. Basil will be back here at 12 noon. If you haven't tried Basil's newsletter, The Opening Call, head on over to TFNN under Trading Newsletters. Check it out. 30-day money-back guarantee. Have a great Thursday, everybody.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his Opening Call newsletter. Right now, you can get a 2-week free trial to the Opening Call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.